Are gold miners finally about to rally? Is it over for stocks? Are bonds toast? Answer those questions and more on Sunday Night Charts. We take a look at charts, help you with the trading week ahead. I'm your host, Steven Van Metre. Thanks for joining me this Sunday. Moving averages, colors on your screen. 21 days red, 50 days green, 100 days blue, 200 day is tan. Price versus momentum. Price is a general direction. Prices are headed. Momentum is a rate of change. A bullish indicator for both is positive and a bearish indicator for both is negative. Momentum often, but not always, leads price. Technical analysis attempts to determine where buyers and sellers are at. Resistance is a level buyers can't break, and support is a level sellers can't break, or resistance is where sellers are at and support is where buyers are at. Technical analysis does not predict prices. It can be used to determine the risk of a trade, help with time of trade, and provide direction to the path of least resistance. Charting offers possibilities, not probabilities, and not certainties. Let's start out with the S&P 500, and we'll notice price momentum are unchanged. Kind of surprising. We might expect to see a switch to some bullishness in either of them, as we saw a big drop and then a huge rally back, but no such thing. What we do see is it's now above its 9-day moving average and its 100-day moving average. Kind of odd that it's bookending more of the key 21 and 50 days, in my opinion. We see 1 month momentum now negative and rising, 3-month momentum switching to negative and following. So we see some mixed short-term signals here. Let's go and see if we can make heads or tails of what's going on with the S&P as we look at the charts with over the last 6 months. Keep in mind, we have the volume profile turned on. I want to turn that on your charting software. And here we can see it came down just to this big block of volume. We know dip buyers were all over this, came back up and gapped up on Thursday and held it up there on Friday. This is now establishing as a sell zone on the SPY around 440. Here's where we're seeing prices just in the midst of the sell zone with the low one around 427. 442, major support of the last 6 months, still down here at 417. So not much cause for worry about the bulls. Worst case, if this is a top, you've got to move back here. Quite a bit of support there to worry about later. If that gets breached, then you've got a problem. At the moment, not a huge amount of worry for the equity team, who is bullish on that. Although, like I said, could be a short-term pullback, but there's still a ton of volume sitting under there. How about the Nasdaq? We'll take a look at it now. QQQ price momentum also unchanged. It popping above its 9-day moving average to match SPY. 1 month momentum still negative and falling, joined now by the 3-month momentum change slowing down. So we do see momentum starting to slow. Let's see if there's any danger in the charts. And my guess is probably not. Whoa, this is interesting now. A completely different picture that we see with QQQ on SPY. And just so you know, I do record this live. I don't, look through the charts and form a lot of opinions. I like to go through this fresh, just like you're watching the show. And what do you see? It got below its 100-day moving average, bounced up, and now it's got some headwinds of a falling 21-day moving average, a rolling over 50-day moving average. But look at that volume profile line on the tech stocks, telling you where the sellers are at. What does that mean? Well, if you're bullish on tech, here your sell zone is between 360, 370, and what is your next major level of support down here at about 340. So this at the moment is kind of bearish. I wouldn't be surprised if we see a retest of all of this buying in the next week, possibly even a move lower. Is that the end of the world? Not so much, because the S&P 500, as we saw, it's got a lot of support below, and of course the Nasdaq could build that up by picking up some buyers back down here. But with the volume profile above the price right now acting as resistance, we have to say it's a bearish look on tech stocks. Let's move on to the small caps, which are supposed to give us some lead, an indicator of where the big caps are going. All it's pretty much saying is the big caps can't keep going higher because small caps aren't following. Maybe today, price momentum still unchanged, now above the 21-day moving average. That's a good sign, but flipping below its 50-day. We've seen how tightly these moving averages are together on IWM. So let's go see if there's anything new, if this has got a breakout coming, a fake out, what's going on. And it's just more of the same over this past year. You could see this consolidation zone. The bulls are just desperate to get this to go higher, but there's continual selling here by the bears. So this still remains no decision. And you can see just how tightly. There's a 200-day moving average come up. They're about to all converge, and that's not very common. So unless something happens, right now the bears are holding the line, and that's key. The bears are holding the line. So no breakout on the big caps explains perhaps why we're seeing those big caps start to roll over and head lower. But as far as pick a direction on IWM, toss a coin. Let's go over to transportation sector, see if something better for a signal here, because remember, transports do tend to lead the big caps. And what do we see now? Price flipping bullish on the 2150, meaning they are turning higher and moving up. The price has now moved above its 21 and 50-day moving average. Those are positive signs. We now see 6-month momentum is negative and rising. So we're seeing some positive signs at the front end of momentum and price, and that's usually a good thing. So let's go and see what's going on with IYT, see if the bullish case looks to be continuing, and you start to get the picture of that volume profile line, which it looked like it was getting rejected. I mean, for a while there was looking bullish, then it's starting to look bearish. Now we're starting to get a little bit of clear picture that this is starting to look like a bottom in IYT. That could be constructive for the big caps. This is not set in stone yet, but this is a good indicator. We could zoom in a little bit. We see over the 90 days, it broke above that. We can see over a 30-day chart, it's above that. I presume the 10-day, the volume profile is above that. So overall, this is a positive sign for IYT, at least attempting to move higher, maybe up here into the 260 range. Definitely got a little bit of resistance around 257. So see where it goes. The volume profile is still critical, but now we flip from a bearish picture to potential bullish picture, and that's being backed up by some of those momentum screens. So let's go on to the energy sector now, which was once all red, now all green. And usually, as we've seen, that is almost a signal that its price is going to go the other direction. But XLE on a rare all green day. Let's take a look at what's going on. We'll start out with crude. Remember, crude was going to drive the energy stocks higher. It did. So crude moving up into this $80 per barrel. Let's zoom out and see 1-year volume profile is beautiful. It's got plenty of price support, as we know, even over the 2-year mark, plenty of price support. And if we zip out even to the 5-year zone, you see plenty of price support. So there's no major concerns there on the crude side. The risk to crude is a move higher. And where would that next move be? You're looking at about $85 a barrel would be the next move higher in crude. So that would tell us that the energy stock should go higher. Let's take a look at that. It got up here to this 55, 56 range where I said it would initially run into resistance. It did. Let's zoom out and see where this could go. And it is looking to break out. Let's go to the 2-year chart. So still looking to break out. How about 5-year chart? And there you can see that the next move potentially into this cluster of trading would be this little blip of volume here at 60 on XLE. So right now, crude and XLE poised to break out and go a bit higher, all supported by that volume profile holding. So, one thing that's hard to figure out is if the volume is the sellers or the buyers, and you have to kind of wait till it breaks through and holds out there. In this case, it did, invalidating that head and shoulders pattern that we were looking at. All right, let's move on to the financials. Price bullish across the board, momentum unchanged above all the key moving average. All the momentum indicators are positive. Let's go to the financials, and here you see now the volume profile line moved up. Remember, it was down here in this 36 range. Now it's up here at 38. So we're looking to see potential new all-time highs. Let's zoom out in the financial stocks. Let's go to the max weekly, and indeed we're looking at a potentially even higher financial stocks coming as people are bullish on the banks lending. But if you watch the Friday show, the banks really aren't lending. So people are hoping that the bull market and stocks will lead to a bull market in the economy and a lot of lending. And if not, well, they're holding the wrong end of the stick on that deal. So XLI price momentum both bearish above the 9 and 21 day moving averages. Now 1 and 3 month momentum negative and rising. That's a plus for the industrial. So some early signs here that things are changing. Although 6 month went negative and falling, But we're looking for some early signal changes. Let's go and see where XLI is. It's right below. And at the moment, the 6-month volume profile is acting as overhead resistance. So price will first need to deal with that. It's got the 50 and 100 day. Wouldn't be surprised to see it pop into those into next week, and perhaps even into that volume profile line to find out if there are indeed sellers there, or if the sellers are all tapped out and overwhelmed by the buyers. At the moment, that is your overhead resistance to break. And it still looks like a topping pattern until that volume profile line is dealt with. Let's move on to utility sector. Price still bullish, momentum still or bullish, bearish on both, above the 9-day moving average. So it looks like it's bouncing. 1 month momentum negative and rising, so it's trying to move higher. 6-month momentum negative and falling. Utilities, let's see if it came down and crashed into that volume profile line, and let's zoom out to the 1 year. It didn't. It got down here, didn't get quite as low, but it came crashing right back into that 1 year volume profile line. Look at that, it's matching the 6-month right on it. So now you can see everything above 65 is sellers. And let's zoom back out here on the 2-year chart. And so now we're seeing kind of the end of this move, potentially on the 1 year range, where sellers are exiting their positions up here. The buyers are still below. Buyers are still interested. See if their hands are weakening. It looks like they're starting to weaken. So right now the direction for utilities should be a retest lower of that 2-year volume profile line. See what happens next week. Let's go on to the gold miners. Are we starting to see a bottom here? Well, price still bearish, momentum still bearish, but now look, popping above the 9 and 21 day, so it's a good sign. 1 and 3 month momentum, negative and rising, good sign. 9 and 12 month momentum now going from red to yellow, and they too are negative and rising. So some good signs with GDX. Now let's go take a look and see, is this finally the bottom that everyone's been waiting for? Well, on the 6-month volume profile, you see it's got some headwind, a lot of selling up there, but let's zoom in a little bit more. Let's go to the 90-day, and now you see it's still got some work to cut out through this 32. So still early signs of a bottom. How about we go to the 30-day? See volume profile still up there, still sellers up there, but here's your hope that maybe there's a bottom here is look at the 10-day volume profile. There's absolutely accumulation going on here. So let's zoom out. And what do we see? Accumulation down here. Bulls looking to take this higher. So that I would say that the bulls are going to run this somewhere into this $32 to $33 price range and try to break through that 50-day moving average. Let's still zoom out over the 5-year chart. Still got its work cut out. I mean, this not a bottom yet. You'd need to see some form of a double bottom, see the sellers worked out. Not there yet, but there's again some early signs. If you're looking for an early sign, the 10-day volume profile is giving you some indicator of that. But how about emerging markets? Are they helping out? Well, maybe a little bit. Price momentum unchanged, but above the 9-day moving average now. So let's see what emerging markets, because remember, if you're bullish on one, you're bullish on the other, whether you agree that you are bullish on both. You are. Volume profile in the 6 months is definitely above. Let's see what it shows on the 90-day. It's above. Look for that red bar. 30-day. Ooh, it's starting to break above the 30-day, which means probably the 10-day. Yep, it's starting to, so you're seeing a bit of accumulation here, not as strong as you see in GDX, seeing a bit of accumulation here. But so far, this is not paid off very well for the bulls buying down here. They tried to buy here, but there's just not a lot of momentum behind this. Moving average is heading lower, so still a chance they could try to take this higher, but the overall trend is definitely heading lower. All right, let's move on to what do we have next? High yield bonds. Wow, how about that? More momentum turning bearish below all the moving averages. Now 1 through 6 month momentum negative and falling. Is this an indication that the broad equity market is done? Is this the early sign we've been looking for? There you see a 6 month volume profile line, clearly where the sellers are at. Let's zoom out to the 1 year chart. And now breaking below that. So now you're starting to see some danger. The high yield team has been buyers a bit below, so I would expect this to come down and pick up these buyers, maybe even a little below at 86. there is a lot of risk there if this goes. So there's potential now early above the 2-year mark. So early indication that the big players have been unloading their junk bonds into all the eager buyers who can't get enough. Early sign of the equity market would head lower. All right, there you go. How about the Bond King? Is he over? Is it time to turn in the crown? Is TLT finally done and over with, as almost everyone but he and his loyal fans have predicted? Not so much. Not so much. Let's see. Price and momentum unchanged, below all the key moving averages. Now we're about back all red. 1, 3, 9, 12-month negative and falling. No surprise. These things have gotten hammered due to the debt ceiling, the TGA getting drawn down. And we know historically that does actually signal a big reversal. But here you have that 6-month volume profile line above. Does it get better? No. 9-month above, or 90-day. How about 30-day? Above? No. Is there any hope on the 10-day? There isn't. I already looked. Okay, so let's look at where, if you're bullish on this, if you're an Elliott Wave fan, and I am not, here's your first leg higher. You got about a 50% retracement of the wave 1, and then you look for the big wave 3 to come. Ton of support on the volume at 139.46 below. So even if this comes down further, and it certainly can, there's a ton of buyers down here, and all they're looking to do is probably accumulate more shares. So sellers think they've got this, and the buyers are saying, go ahead, we'll just take all this we can get. So no, the story of TLT isn't over. Too much volume below to call it done. But like I said, if you're an Elliott Wave fan, check it out. It looks pretty good. Gold futures, bearish. But now, 1-month momentum, 12-month momentum, negative and rising. Kind of a mixed bag on them. I mean, I don't like below these moving averages. Momentums are trying to turn up. Let's see if gold got a better story. Let's see if it's going to tell us something about GDX. And 6-month volume profile rejected at 1785. So it comes down here, and all you hear the bull say is, we're not going to let it fall. Well, it's been trending down, so not so much. 1750 now is key support, sitting right above that. Still the line to break. The big problem for gold is this 1678 or 87. That's the big problem. Let's zoom into the 2-year chart. You see volume profile above, sellers clearly above this. This is the one thing baffling inflationists, even on the 1-year chart. So whether or not this moves up, it's hard to say. It probably will try to shoot higher in early trading, but still the overall trend for gold is lower, and that's not good for the mining stocks. But again, I still think the mining stocks make a short run at this, and then we'll find out what's the real story is going on there. How about silver? Price momentum, totally bearish. Only things that are looking good is 1-month momentum is negative, rising. 3 and 6-month turned down. The 12-month going to negative and rising isn't something to get too excited about at this point. Where is silver going? And it's fighting, but the trend is not good. If it breaks below this 21, again, you see there's virtually no volume down to 18, virtually none. And that tells you it's fighting a losing battle here. The sellers are winning, and the moving averages are headed lower. So I'll say bearish on silver, and that probably doesn't bode well for gold or the gold miners. And how about perhaps the enigma of all of this, with energy stocks heading higher? How about the dollar? All green as well. So energy and dollar, those are two things you don't see with bull patterns on both of them at the same time. It can happen. They can certainly both rally, but doesn't usually hold out for long. One of them comes true. Now, so many people told me this was indeed a topping pattern of the dollar. Certainly does not look like it. The next move for the dollar should be up here into the 97 as it crosses through this bit of between the supply zones. If you zoom out, you can see it doesn't spend a ton of time there. When it confirms this 94, it tends to move quickly up there. Not something the equity bulls want to see. How about we look at UUP, where we can see the volume profile? There it is on 6 months. You can see it on the 1 year is holding. So it's telling you there's a bottom in the dollar going on, even on the 2-year chart. Very, very clear picture. Not good for the equity market. Not good for gold. Very good for bonds. You see bonds and the dollar rising at the same time, and you've got a switch from stagflation to deflation, my friends. And with that, we'll see you back on Monday. Thanks for watching. Bye now. The content of this video is provided as educational information. It's not intended to provide investment or advice. It doesn't be construed as recognition or solicitation by security, financial instrument, or participate in particular trading strategy. This video is prepared by Steven Van Metre. Personal capacity opinions expressed in this video that do not affect the view of Atlas Financial Advising or Steven Van Metre Financial.